Hello and welcome to the Cryptocurrency News channel. This is the TA, FA, and chart analysis for Saturday, February 12th, 2022. We didn't really dip nearly as much as I thought over the weekend, or at least not as of yet. We are barely down. If you actually look at the graph right now, you can see, yes, over the weekend, we are actually down a little bit from this top to this top. But even though that might seem like a lot, really it's from like 43,000 to 42,000. And the bottom to bottom has hardly dipped at all. So the crest has dipped about 1,000 points. But that's a lot less than I actually expected. I expected us to go into the weekend much more bearish. Now, we're still bearish right now because I've heard rumors that the Fed might actually raise in the emergency session on Monday. They might they might do a double hike on interest rates to 0.5% from 0%. They might actually do that because inflation was worse than projected. The rate of inflation over the month of January did not slow down as anticipated, so the CPI was worse. And if they do a double hike, I do think that will shock the markets, at least for a couple of days. So right now, just like going in on Friday, I would not buy yet. I definitely would wait until after Monday. I mean, the best you can hope for is that the Fed is all happy coming out of that meeting saying, we're perfectly fine, we're not going to raise rates. But what's more likely to happen is they're going to raise it maybe one notch, maybe two notches. Because them calling an emergency meeting like right after the CPI report means they're concerned about the CPI report, and they should have started raising rates and fighting inflation earlier instead of waiting this long. Inflation definitely dampens consumer confidence because one, people don't like stuff costing more, but two, at the same time, they know the Fed are going to raise rates very quickly this year because of that, and that will have a pullback effect on the economy. I don't think the White House will actually pressure the Fed to not raise rates like the last administration did. So I do actually think they will actually raise rates this time and raise rates as they see fit. So hopefully, I hope they do raise rates. They do need to combat the inflation. They need to be careful not to like just jack it up like crazy, but they do actually need to combat inflation. We were actually at a much worse rate in the 80s. We were like high interest rate, which was like 10% back then. High inflation, almost twice as what we had now. And we also had high unemployment. So we only have one of those three factors. So we'll pull through. And my guess is that the second half of this year, we'll actually see the market go up. But right now, I mean, I don't play longs and shorts, but if I had to play shorts, I would probably short right now. But I definitely wouldn't buy in right now. Not until Monday, until what we see the Fed actually has going. Because if you look at the other economic reports, job reports are still very high. The employment numbers are really good. Jobs added was actually really good. And the only problem right now is there's too many jobs and not enough people to fill them. And that is generally a sign of a very strong job market. So it's not nearly as bad as we had 40 years ago, but we only have one of those three problems. But that one does actually damper consumer confidence. Week over week, we're still up because we started out the week like way down here, and obviously that's up. But we kind of peaked like midweek, and we haven't really been able to grow because of that. And then like the CPI report right here really kind of killed everything. So right now the technicals honestly do not look that good. I think like the short-term technicals from the last 2 or 3 days outweigh the long-term technicals because what we know on the fundamental chart. And I think like combining fundamental and technical numbers is what actually will get you the best readout instead of just relying on one of them. In terms of the oscillator numbers, the oscillators are pretty much neutral. The exponential moving average on the 10-day is still a buy, but the EMA is on a sell. The EMA is less than the SMA, so I think it's a little bit more bearish than bullish. Yes, the 20 and 30 and even part of the 50 says buy, but because of the fundamental analysis and because of the news that we know that came out with the inflation numbers and the Fed meeting, and of course the Russia-Ukraine thing, which I'm sure we'll talk about on stream, I do actually believe that right now is more of a sell time than a buy time. Monday could change my mind if the Fed doesn't do anything, but my guess is they will. If they don't raise the interest rates immediately on Monday, they will announce that like a bigger interest rate hike later in the year. So that should actually jolt markets. We might drop like 2,000-3,000 points just based on that alone going into Monday and on Monday. So you might have a good chance to pick some cheap coins up there. If you want to buy right now, only buy a little bit. Definitely save until Monday. On the weekly, definitely not a buy on the weekly right now. I would think you have to look out 2 or 3 weeks before you hit a buy. There might be a slight bounce back. Like if the Fed news makes like the markets just crash really, really hard, there might be a slight bounce back. So you could look for a relief rally if we hit like the mid 30s or lower. But even that relief rally probably won't last too long right now. All the indicators up to the 50-week says sell. The oscillators are basically neutral. So, I mean, if you really want to look for a buy opportunity like that the relief rally from the Fed news might have a small window, but that probably won't last more than 1 or 2 days because the overall sentiment based on the report is actually negative. And unless like the subsequent reports of CPI are see actually improvement, that might actually be hard to contain. So we actually might be down for like the next 6 months or possibly an entire year because of them not able to control inflation. But we shall actually see. Also, them raising the interest rates obviously is going to dampen the economy. And when that happens, people aren't going to want to buy risk assets like crypto. So you could have a double whammy, and we could actually be low for most, if not all of the year. Hopefully, I think there is a very good chance that we'll turn up once summer comes around, the second half of the year, but there is a chance that we'll be low all year. On the 1 month, we're looking at an exponential moving average and simple moving average over the last 10 on sell, and that's probably going to be even more sell. And we might actually get the 20-month to be on sell, like after the inflation report, depending on how bad, I mean, not inflation report, the Fed meeting, depending on how bad that is. All the oscillators are actually neutral. So right now, definitely on the monthly, do not buy right now. I know like the exponential on the 20 is and the 30 is buy, but that's 2 or 3 years back. And no, we're not going down to like 20 or 15,000 or something, but there is a good chance that we'll be going to the 30s and maybe stuck in the 30s for a while. So definitely hold back because yes, the Ukraine-Russia thing is getting people kind of tense, but I think most of the reason we're in this bearish sentiment is because of the Fed meeting. I still don't believe that Russia is actually going to attack Ukraine. I think it is all a bluff to get more concessions from the West. If Russia does attack Ukraine, we can go much, much lower, and that's another reason why you shouldn't actually buy right now. So that's the report for today. Let me know what you think. Like and subscribe. Hit that bell notifications button, and I will see you next time.